Okay, now we are about to start things off for tonight. Let me actually bring the screen over to the other screen. Right now I have the bot screen up and the bot is running. We'll start off with that. The bot is running and it'll run overnight. I have two long strategies and one short strategy. And I believe the short strategy has a trailing stop attached to it. So I'm going to let these test out. This is in a testing phase. Futures are up 1250 after hours, and we just had another spike back here. Probably an Asian related pop. But I want to jump over to. I want to jump over to this other screen and kind of do a little update on today's market. All right, so let's jump over back to the main screen. This is high tech. All right. So I decided just to go back till 9:30. Excuse me, 9:30 today, and just kind of go back. My throat's messed up here a second. Hold on. So I wanted to go back and actually take a look at the market today, the general market. The S&P. Usually when we talk about the market, we're talking about the S&P 500 and S&P futures. That's what's usually on the screen if we're not looking at anything else. Just a good overview of the market. So a lot of times you're going to have all those markets kind of line up. Majority of the time, things stay in sync. But then you have some days like today, the Nasdaq underperformed the other two indexes that we follow, the Dow and the ES or the S&P, and you could use that to your advantage, especially using the tradeometer. If you see it start to if there's one, I always say the tradeometer is great because after you get used to it, you'll be able to tell when it's on and when it's on, it's on, and it requires that market in that state of flux, back and forth, and not too aggressive. If there's news out there and the market's breaking down, of course, things are going to get pushed past their limits, just like anything else. So it's not. You have to know how to use these things. Yeah, I'm just going over the chart for today, and just catching up right now. So getting back to this, I wanted to just kind of measure out all the setups we look for. What are use any analogy. I always use analogies with the market, but our job is to find trading opportunities and trade them. So throughout this whole map of the market, how it goes up and down. There's certain areas where there are what we consider higher probability setups, basically, where you have a better chance of a reaction, and with that reaction, either be a bigger than average one or more of a easier one to predict, becomes that trade opportunity. Now the other part of it is being able to take that, stepping up to the plate, all this other thing. That's the big mental game. So we do, that's one of the things I like to do is just kind of measure out the market as we go through. Even if I see a good setup and don't take it, doesn't mean that we didn't learn something from it. And we kind of talk about this pattern all the time, the flag, and I kind of developed a way of looking at some indicators to help us identify that really bullish flag, and that really starts with that 60-period stochastics. Once that's either facing up or embedded above 80, then we always talk about being embedded, but if it's rising, it's also, I would consider that, because it hasn't flattened out or turned over and under 80. It's actually heading up. So we had that flag and that pop, and we know that everything based on a 1 minute time frame. These charts are going to be based off of that. It's going to be very volatile versus the bigger trend, which might be a 60-minute time frame, and you might see, that type of move involved. You don't have to worry about the ins and outs of the market. The faster the time, the more volatile the charts are going to be. So we did have a flag. It popped, and then we had a nice divergence here, and I think there was a Rambot. But you can see there's a great example of what you want to always take. And this was actually a 14.3 and a 9.3 divergence. And yet it pulled back past the 20. And remember, a divergence will the good, easy way to predict where a divergence is going to trade to is there's probably an underlying area of a support or a channel line or a trend line. If that divergence happens near that, we tend to always break through, where in these cases we didn't break through. So you get a divergence, then you know you're going to break through. So you always plan on, add that into your target, knowing that you're probably going to be trading down below the previous low. And then it moved back up, and then you had a couple tradeometers. That was a great tradeometer setup right there. I put that square in there. And then the same thing, just looking back here, scrolling through here. I would almost consider this a divergence here between this little candle dip, the pop, and the fast little candle. Didn't really take out the lows.
Tradeometer ES overbought.
But the stochastics were very steep compared to the steepness of that price level. That's where I start to see that divergence happening. And either way, you look back at it and you're saying, you know what, Johnny, you can't argue because it did rip higher right after that. So there was probably something to that. It's just that's a harder one to identify in the heat of battle, But if you could start to measure that off, these are the setups. These are the potential setups you want to be taking. Here's a pretty decent divergence here. You have a low and a lower low. Well, actually, you have that low here and the higher low here. But you actually see this was the running divergence. I think this is where the bot got beat up too. There was a running divergence here midday, and the bot got hit each time because it was registering as a divergence, yet it wasn't breaking out. And that was very, very, kind of tough to see, because it was like, wow, there's always a scenario out there that's going to be under the radar, and you're not going to be able to read it that good. That's why it's always good to maybe even consider having that hands-on approach. Have the bot, which I'm planning on doing. My leg just cramped up. Is using that bot to give me alerts of these setups and then really visually confirm them, especially at night. I'd rather get up and we got to just these. As you watch tonight, there is going to be some interesting alerts coming through the trading bot. Definitely. Let's see what else we have. Let me ZZ RT1 divergence stop 93 on our place. All right. All right. So let's go back to where we left off here midday. After the tradeometer came in, we came down here. We had this little running divergence. That's pop back up, chopping around. Something to pay attention to, we don't always mention it, is a spike up here. That spike and reversal candle on big volume. That really big volume candle right there really pointed to that kind of reversal. And then we pull all the way back down. And
tradeometer YM overbought.
Even though this might have been a perfect area for divergence, it didn't really show up on here, so I can't argue. The only thing it had going for was an engulfing pattern back here, which is a bullish candle. And then we ran up. Again, whenever we break down from a channel line, look for that retest. We didn't really get there. And then right into the close. After hours doing nothing. Right now we got a nice little ramp up here. This is where we are right now. Not much you could do other than catching a good trade and having a trailing stop. You might be doing pretty good on that because it's not that volatile right now. So that's the recap of the market, and we're going to do that again tomorrow and the next day. Identify those flags, and the divergences, and trade those. right now I am happy to see this market higher. You guys looking at any stocks? I want to actually, I just want to go over that. Maybe I should pause the video, send it out to people who missed this little nugget of information. Let's take a look one more time at the big picture. I'm just seeing good consolidation here. It's not selling off yet, and that's on the hourly. I like that. We're not up to the top of the trend line yet. We're not up to the recent breakdown yet, but we're very close to it. I don't know. I still think we could go higher. I know news is going to be a big factor, but once we get through that Chinese trade deal, negotiation, if that plays in, just get it resolved somehow. And I'm probably going to get a nice move tomorrow on CGC. I wouldn't maybe look for a couple upgrades and stuff. Yeah, so I mean, at this point, feel more bullish in this market. I mean, we still have the 200 above us. We still have a lot of things. That little level we broke down through. The other things we should mention is one of our best bets of the week, two best bets of the week. The LUV, which is the airline divergence, and then the HIG, which is an insurance, health insurance, or insurance, diversified insurance, Hartford Financial Services. This was also nice. Beautiful divergence here. So just like we had divergences back here, and we had a nice, I have to give you a good example where one is, not on this one. But this is a good divergence right here. Very nice one. So even though we're kind of, up here, it's, this, I think, really believe the trend line is going to hold. We're going to end up moving higher. I'm not making any crazy things that we're going to rip. But there is a nice area right here that we're on. It's like a, I'm looking for my drawing tools. There we go. There was a nice inverted head and shoulders pattern here. So, just like that. So we're trying to get through that. And that's a good pattern in this downward channel. There's even a tighter channel. So everything points to this one going higher from here. So I'm very happy with that one. The Delta Airlines is coming out tomorrow. It's probably going to affect the other airlines. JP Morgan's coming out tomorrow. That has a nice flag, nice reversal today off of Citigroup's earnings, which reversed big. And look at how Citigroup closed out. Bank of America coming up, already starting to move. Goldman Sachs, the whole financial sector was on fire today. I have a couple, this MTC, kind of a wild card. Nothing's yet going on here. It's dangerous. I mean, look at this. 4 or 5 days it doubled. Probably some Chinese holding company or something. Anyway, very dangerous, but you never know where it's going. All right, I think that's it for now. I think that's it. Good enough for tomorrow. Again, probably look for some more of the same. The cannabis, with the momentum behind cannabis, continuing with the futures higher, up 1350 right now, and we're going to have banks out tomorrow morning. So we have a good report out of some of those banks. That will be very nice for this market. But I don't know. Citigroup didn't perform. JP Morgan, I don't know what the outlook is going to be here. So I want to turn off the video. I want to stay here with you guys, hang out a little, and finish my sushi. Play you some music now. And for those out there picking up this video tonight and talking about tomorrow, I would still go with the best bet. with the HIG as one of the best bets. Everything else is going to be affected by news, I have a feeling. I mean, the LUV, which is good divergence, but Delta, might throw a curveball into that. Hit by a pitch. All right, that's it. I'm turning the video off. DayTraderRockStar. Tune in tomorrow, 8:30 a.m. DayTradingRadio.com.